Hey everyone, Kedge here, Senior Investment Specialist from Wealthi. Jumping on to do a bit of a comparison on two of the more affordable options we currently have in high cash flow areas. It's been a request from a lot of our clients, and I thought it might be useful for the wider Wealthi community, so I thought I would jump on and do this. The reason we're focusing on an affordable stock for investments, and this is your price ranges between your 500 to 700,000, is because that's the end of the market that is likely to continue to grow. With rates rising, inflation levels increasing, meaning people's living expenses are going up, people's borrowing capacities will be coming down. So we're already starting to see a bit of a softening on that top end of the market. You can see here from CoreLogic data that the 3 months leading up to April, we saw capital homes see a 0.5% drop in values. But on the other side of the coin, we are forecasting a pretty large population growth coming into the country. We're looking at circa 200,000 a year. And in terms of supply levels, in some parts of the country, they're very low at the moment, with not a lot of new stock coming to market either. So there's still going to be a lot of demand for the property and pressure on values to increase. And we've already seen a 3.6% increase on that lowest quartile. And this is a trend that we're almost certain to see continue. So the two areas, without further ado, that we are going to be comparing are going to be house and land opportunities to the south of Perth. We're looking at 45 minutes from the CBD, in comparison to some 2-bedroom apartments in the Canberra market within 10 minutes of the Canberra CBD. So both have their pros and cons, and so I'll take you through some of the data, and then you can be the judge of what you believe is better for you. So I always like to lead with population growth. And we can see here that the net population growth, so if I'm comparing WA to ACT, we're seeing in WA, we're going to have anywhere ranging from, here at the peak, about 1.4% to about 1.2% growth over the next 10 years. And in Canberra, we're looking more around that 1 to 1.1 growth. So in terms of percentage growth, WA market slightly pips ACT. On a side note, somewhere else that's also interesting to look at, not here to talk about today, is Victoria. We can see the projected growth in this area. It was definitely the worst hit during the pandemic, and based on everything that's happening in there, definitely a market that we want to be looking at, but we'll save that for another time. So now moving on in terms of forecasted growth in these locations. So if you're here, this is a report that was done by Aussie, which looks at the average growth over the last 25 years in these capital cities for both houses and apartments. So this is done over 25 years, and that's the trend. And obviously we know with property that it's not going to be an even growth every single year, but if you hold the property long enough, normally the averages do regress to this mean. So you can see here for Perth houses, which is our first comparison, we're looking at an average of 6.7% capital growth a year. This is the number I've used in a future cash flow I'm going to show you a little bit later on. And for growth in apartments, we're looking at a 4.7% growth in Canberra. So purely on a growth front, once again, Perth is probably slightly ahead of Perth houses, I should say, slightly ahead of Canberra apartments when it comes to that. So next, we want to look at affordability. We did say that's going to be a big driver in terms of which areas are going to grow. So starting off with unemployment rates, we can see Perth and Canberra are neck and neck. We're looking at 3.7% unemployment rate as of March 22. In terms of average earning per person in the country, in these places, in ACT, the average earning per person is just higher than WA, and it is actually the top two in the country when you look at the average earnings per person. So this then shows the average affordability in all of the capital states. What am I saying? Capital states? I'm saying capital cities. And you can see here that WA is the most affordable, and Canberra still reasonably affordable when you compare it to the major states. But once again, we aren't going to be looking at houses in Canberra. We're going to be looking at apartments that are a similar price point to the houses we're looking in WA. So then affordability becomes a lot more even as well. So going in and showing a couple of the examples of what we're looking at and the reasons why. So in Perth, we're looking at an area, this coastline here, which is about 45 minutes south of Perth. This particular area of Lakelands and Medora Bay is where we're focusing a lot of our attention at the moment. Of course, you've got the coastline. We've got a new train station that's being built here in Lakelands that's going to be coming in 2023. We've got new schools being built which already have waiting lists in there. So a lot of great infrastructure, and this coastline that I'm talking about here is the last bit of the Perth coastline, or Metro Perth coastline, that is left to be developed. And we've probably only got about 5 to 7 years left before that's fully developed. And we're going to have to be going a lot more inland. So it's a great opportunity to pick up some great options on the coast. And for us over on the east side of the country, we know that that's where a lot of the value is long term as well. In Canberra, one of the areas we're focusing on is an area called Phillip. This is just south of the Canberra CBD, about 10 minutes out. Similar to the option in Medora Bay, Lakelands, where there's a new train station coming in 2023. We have the light rail, stage 2, which is being built here in Canberra in terms of infrastructure going into that area. So it's useful to kind of look at what's coming in the future, where governments are spending their money. It's an indication of where population is going to be going, and it's nice to get in a little bit earlier than when the infrastructure is going to be there. Also, zooming into this area, there's a new Westfield in this suburb as well. Once again, a great indication of where the population is going to be going, hence why Westfield is investing there. And this Canberra hospital here is, you're looking at getting a $500 million upgrade to that hospital as well. So once again, a lot of great infrastructure going into this area. Okay, so moving on. So just very quickly, so this is that station I mentioned in Lakelands, coming in 2023. Now, comparing rental and vacancies. So vacancy rates in the Medora Bay area that I mentioned before is 0.66%, so almost non-existent. And speaking to property managers on the ground, for any rental that's there at the moment, we're having about 30-40 people that are coming to inspect it. So that's the kind of demand for stock in this location. Another interesting stat to look at is what percentage of the population is rental population. Neither good nor bad, but indication of the type of people that are there. So the majority of people in here are owner-occupiers. So there's a lot of other houses in the area where they've spent above and beyond. They've spent $700,000, $800,000, $1 million building a home, nice homes in this area, which is nice for the values where we're getting investment stock in there for around that 550 to 600. And when you have a lot of owner-occupiers in a certain location, they are the ones that tend to buy emotionally. So in the future, if there is a time where you're going to resell this property, you're likely to get a higher value as well. On the flip side, we've got Phillip, where we've got a very high rental population of about 50%. So in Canberra, we have a lot of grad jobs, government jobs, universities, and what else do we have? Universities and hospitals. So got a lot of rental population for that reason, and we'll see a little bit later that the rents you're going to get there are going to be slightly higher, and it's going to be better for your cash flow. Vacancy rates at 1.94%. Still ultra low, even though not as low as the ones we looked at in Medora Bay. But once international migration and this stuff settles in, people are returning back to the universities, we're going to see that vacancy drop quite dramatically as well, as supply levels remain quite tight. So with the rental population here being a higher percentage, we're more likely to see that rent in the area already being a little bit higher. That will continue to grow as well. So what I'll do now is I'll very quickly show a cash flow with all of the numbers in there, using that growth rate that we saw in the Aussie report and the current rentals in the market as well. So using this example of a 2-bedroom apartment in Canberra for 600,000, we're looking here at the purchase costs, which is stamp duty plus 2,500 for solicitor fees. One thing to note in Canberra is the stamp duty that you pay is tax deductible in the year that you pay it, as opposed to every other state is the stamp duty is only tax deductible once you sell the property. So I won't take you through all the numbers, but the capital growth rate here that I've stuck in are 4.7% a year. So just, you can remember this number. In 10 years time, what that's likely to mean is this property at that growth rate will be worth around that $950,000 mark. The rents we're getting in this location are likely to be around $650 a week. Once again, I'm not going to take you through line by line on this cash flow. If you do want to know more, always feel free to reach out to myself, and happy to talk you through it. But once you factor all of this in, you're looking at a positive cash flow of about 8,500 in year one, and you can see how it's growing with years to come as well. So 6,250 before any tax benefits, and after the tax benefits, you're looking at 8,500. So now I'm going to flick over and show you the one in Medora Bay. So we're looking at 575 purchase price. We're looking at a capital growth rate of 6.7% long term. So in 10 years, the property is likely to be worth around $1.1 million. We've got here the current rental in the areas. You're looking at around that 550 mark. So as a percentage, a little bit less than the ones in Canberra. And so your cash flow positive for the year, pre-tax 3,600. And then after tax benefits, you're looking at about 7,200, and obviously grows year on year. So you can kind of see the comparison between the two states there. Overall, the growth prospects on a house and land in Perth seem to be a lot more positive than the ones in Canberra. And in terms of cash flow though, Canberra apartments closer to the CBD have a much better cash flow position. So there's the comparison between the two. If you do want to know more or want to ask a few more questions, feel free to reach out to myself or anyone in the Wealthi team, and happy to go through this or any of the other investments that we've picked out around the country as well. Have a great day, and happy investing.